Pro-youth is very important, and it is probably the right step to take. If you look at Namibia's population pyramid, we're very heavily skewed to young population, so obviously you can't not take the youth into consideration. If you look at we did this exercise a couple of years ago. Obviously, everyone who's going to vote in the next election has been born already, right? Because they'll have to be 18 within the next couple of years. And if you consider the upcoming elections in 2024, around 65% of the eligible voting age population will have been born from the mid-80s onwards. So they'll be relatively young, 40 or younger at most. And they will account for 2/3 of the potential votes available. They won't have the same recollection of the independence struggle, the ties to the ruling party that a lot of their parents do. And so they will be the big driving force if they do come out to vote. That's the first part. But if they do come out to vote, they will be the driving force behind Namibia's next government. And so obviously you do need to take them into consideration. I do think the big challenge, though, is that obviously we sit with very high youth unemployment, and if you look at unemployment, unfortunately, our last data is only for 2018, and so it's very, very outdated. But even in 2018, I think if you look at ages around 15 to 24, the unemployment rate then was around 60%, so almost 2 out of every 3 people. And that's not that statistic excludes people in school and university, and that is very concerning. And so obviously for people in those age groups, especially those who are unemployed, inflation will bite. And I mean, I think the one important consideration for Namibian inflation is that overall demand remains quite weak. Given the situation we see with households, obviously very highly indebted, the ability to take on debt is difficult because they're already highly indebted and it's a risk environment, and so the demand is a bit weak, but also the willingness to lend might not be as high also because of the high credit risk we face. But that's why we see inflation, not shooting the lights out in Namibia over the next sort of year or so. And that's because one of the largest parts of the rental, or of the inflation basket, is the rental component, which is around almost a quarter of inflation. And with a relatively weak demand, it's difficult to see how we're going to see high rent escalations as we did around, was it 2016-17, when inflation was much higher, touching the double-digit levels. But as mentioned, it's going to be in food and fuel prices, and that's where it really does hurt most people. With the question of commodities, what we see with this, especially with Russia, quite a substantial global commodities producer, obviously the sanctions there are positive for commodity prices or increases. It just depends on your exposure to those commodities. And that's where we saw South Africa was very lucky last year with the rise in platinum group metals, so PGM prices. That assisted South Africa's government a lot. They got better revenues than they were expecting, and that helped. And it also resulted in a current account surplus, which meant that the rand was a lot stronger because of that. Our exposure hasn't been as lucky. Our largest export is diamonds, and obviously in times of crisis, diamonds tend to sink because it's a luxury item. We did have gold exposure, and that was nice, but it's not as substantial. And so that is a bit of a challenge. I think where we might have some luck going forward, obviously, is depending on what happens in the uranium space, longer term. In oil as well. So it's still highly speculative with the Shell and Total discoveries, but we're still waiting. We know that there is oil. The question is it commercial or not, and that takes some time to find out. But that is very positive. Firstly, that they have found some oil, so it's positive for exploration spend. And then from there determining whether it's commercial or not. That obviously it's a binary event. Either it is or it isn't. But from there, it can have a huge impact and can change Namibia's trajectory quite dramatically. But even just the confirmation that there is some oil is very positive. I do think we are seeing increased investment in the mining space, but I think it's important to bear in mind that you don't invest in mining because the policy space is so nice, right? We see mining in some of the most conflict-ridden countries across the world. You go there because it's economic to extract those resources because you mine where there is gold. You can't mine gold where there isn't any in the ground. And so I don't think we must confuse investment in mining too much with the general policy. It's more due to the ores available or the resources available as well as the prices and the cost of extracting them. In terms of energy prices and renewables, I do think that Namibia can leverage that shift quite positively. And I think obviously with the European reliance on Russian fossil fuels, there is a bigger shift to try and move away from the reliance on the fossil fuels. If we should entirely sort of rely on a single industry, I don't think that's really the case. I think Namibia does have an opportunity to position itself very positively as a renewables country. So not necessarily renewables for one thing, but renewables in general. But that comes down to creating a policy space that's broad, not again focused to a very specific area. And not just necessarily renewables, but also clean energy sources like, again, the nuclear fuels, such as uranium. But again, that requires shifts to the policy environment. I mean, there's no reason why Namibia couldn't be, for instance, a net exporter of renewable energies, but, the challenges from baseload energy aside. In terms of the budget, it was very much pro-youth in the speech. In the numbers, not as much. And that is the worry. I mean, we do see incredibly large levels of expenditure directed to things like the Ministry of Education, and we spend a lot on education in absolute terms and per student if you compare regionally. The danger, as I mentioned earlier, is the quality of that spend is quite poor. We have a lot of graduates who come out unable to speak and read and write English very well. Their maths isn't where it needs to be. The science and the chemistry is quite poor. And those are the building blocks you need for a future for the youth. And so the quality of that spend needs to be improved. It's not just that we need to spend more on it. And I think in terms of if you really want to be pro-youth, you need to get growth going and get employment going. And to do that, you need to make it easier for a lot of the youth to tap into their entrepreneurial skills, make it easy for them to start a business. You don't, not these lengthy, physical processes. Apply for things online. Submit forms online. Most of the youth have access to a smartphone. Why do you need to go to a branch in Windhoek if you're living somewhere far away to submit copies? A lot of these things that can streamline the processes and make life easier for a lot of young people. Even in terms of tax reform, for instance, so a staggered corporate tax, as opposed to just one flat one, where your large multinationals pay the same level as well, for instance, as what a new startup would. In terms of sort of fuel prices and uncertainty in the speeches, look, as I mentioned at the start, those who know don't predict, so it's difficult to say. We're not an oil exporting country, so obviously, if you're Angola, you can change your budget nicely now because oil prices are a lot higher. For us, it doesn't have too much of a fiscal impact. It does have an impact for people on the ground, obviously, and on that spend, but I don't think any major changes there. Obviously, there are a lot of things that could change. What happens in Ukraine? Does it become larger? Does it pull the rest of the globe into it? Does it sort of carry on as is for a while or for a short while? Does it die down? But that's very uncertain, and I don't see much use in speculating on it right here or right now. In terms of the construction industry, I think the outlook for the industry has changed. The nature of the industry has shifted, right? We don't see any major projects anymore. The bank headquarters are completed, the airport upgrades are completed. It's effectively just sort of the major projects at this stage are the road upgrades. Where we do see government increasing its expenditure, it's not on the development budget where you would see increased construction. And so obviously there isn't much in the pipeline for the construction industry, which is a concern. I believe the nature of the industry has shifted as well. The focus is no longer on Windhoek. Windhoek seems pretty dead from that perspective. It's a lot of smaller projects spread out across the country, and I think it will take a while for that to change. I think on the positive front, we might see could be positive for the construction industry. But the industry is on its knees, and we've seen a hell of a lot of consolidation there. I think in real terms, the industry is back to well below 2010 levels now, probably. So it's collapsed. On the census, we are effectively making policy in the blind because we don't know what's going on. And that is a major concern. The other concern is that a census doesn't catch you by surprise. It happens once every 10 years. Every 10 years it's going to happen. So the fact that money isn't found for it is quite surprising to me and disappointing as well, because you knew the expenditure was coming. Revenue was increased, the revenue outturn was increased for this year. So, I think, we could have found the money. Expenditure was increased by about 2.6 billion compared to what was estimated in the mid-year budget for the upcoming financial year. It's not that you need to spend $1 billion on a census. There are ways to make it cheaper, but we need to know what's going on. As to speculation, do we not want to know? I don't really know anything to that, but if I just think of what we've seen, from about the last surveys we had around 2015-16, we saw a lot of deterioration on socioeconomic indicators compared to the prior years, and obviously things have worsened since then. And so politically, it might not be as ideal to see how bad the situation has got to have hard numbers to back it up. But that's purely speculation at this stage. In terms of the rebound and sort of concentrated on mining. But mining is a big part. It is a big export industry. There's a lot of value in it. In terms of diversifying the economy, that is where we speak about, broad reforms, not very singular or sector-specific reforms, not government picking a sector and saying this is what we're going to focus on, this is the winner. This is where we think allow it easy for anyone to come here, start a business, whether it's Namibian or not. If you've got the capital or the skills and you come here and we provide the conducive environment, allow that to flourish as opposed to picking winners. I mean, you can put all the smart people in Namibia in a single room and decide which sectors to pick, but they will miss something. And so, putting all our eggs in the basket like that isn't worthwhile. But at this stage, we don't see policy moving in that direction. In fact, we see it moving in the opposite direction. The policies we see are very, of late, are more sort of economic nationalist policies, and that's not what we need to see. If we look at the investment promotion facilitation bill that was tabled and withdrawn last year, it's very counter to anything of this nature. It scares away foreign investment as well as local investment. You don't see Namibian business wanting to invest in an environment like that, where you've got policies that are introduced like that, as well as that make it more difficult to bring in scarce skills where you do need scarce skills. So free trade agreement, I'm pro free trade. I just don't see as that alone being the savior. We've got a lot, and if you look at the investment numbers, we need more than just sort of a continental free trade agreement to go in the right direction. But I mean, there's still, if you don't have tariffs, there's also a lot of non-tariff barriers to trade, which cause an issue. So I don't think it is really the main thing. Government spending as a stimulus. Look, government spending does have a lot of leakages, right? And so it's not necessarily the best way to see a stimulus, especially where you've got a government that's got a rapidly increasing debt profile as well as still running large deficits. But I do think we've got a lot of money to spend, right? Government spends around $70 billion a year. That's a lot of money. It's the efficiency of that spend, which was the question. Is government really, I think this touches on a lot of the other points, is government really spending that money as best as it could? I mean, government tends to be involved in a lot of areas where it shouldn't. There should probably be a refocus to say, all right, what areas does government need to be involved in? And focus and channel spending on there. Does government need to be subsidizing entities to be competing with the private sector, where the private sector fulfills that role sufficiently? No. That money could be much better spent on things like land servicing, providing access to land, decent education, access to healthcare, making sure that schools are in good condition. In terms of inequality and inclusive growth, yes, look, Namibia is a highly unequal society. The Gini coefficient does provide a decent measure, but it's also a bit of a flat measure. It's a bit two-dimensional, right? I mean, you can have high inequality, but you can have a country, for instance, where everyone is equally poor. Far more equal society, but it's not necessarily the society you want to be in. So I think the challenge here is that we see this large issue of we've got a shortage of skilled labor and we've got a surplus of relatively less skilled labor. And we're not seeing job creation in the lower one, and we're restricting the ability to create jobs for those people. Firstly, with the policies we maintain, making it difficult to start, operate, run a business, making people not want to invest in this economy, or take their marginal dollars and reinvest it here. And I mean, with skilled people, you tend to see more wider employment as well. So I do think that it's not a quick fix, and there is no quick fix. That's the danger. And I mean, longer term, definitely improvements in education, but those are things, if you improve the reading and writing outcomes in grade 1, that's something you see, sort of 15, 16 years down the line once they finish university. So there isn't a quick fix, and I think it's difficult. Transfers from government do assist to a large extent, right? I mean, I think the old age grant in Namibia has been very successful, and I think it's been a very good introduction, and it's provided a lot of assistance. But you also don't want to be in a situation like South Africa, where you sit with far more people reliant on grants and not able to find work as much as they would like to. And you've got more people relying on those grants than what you have people contributing to those grants through tax. And that's also obviously not sustainable. So, a social safety net is good to have, and I think it's important. But at the same time, I mean, I think for most people, the best dignity you can give them is to provide an environment where they can find work and get gainful employment. And I mean, we see that in Namibia, we talk about 33, I think the 2018 Labour Force survey was 33.4% unemployment, right? It doesn't, it's high, but, it could be a lot worse. But the quality of that employment is very low. Most of those employed people are employed in subsistence agriculture, and that's not really gainful employment. And so the formal employment is much lower, and that's something we definitely need to address. Doesn't mean working for a big multinational or a bank or something, right? It's running your own small company where it's just you employed, or maybe one or two other people employed, running a small service somewhere. That's still gainful employment. And I think there we need a lot from the policy space, making it easier for people to do that, sort of good grassroots adjustments there. In terms of the venture capital and so on, well, I mean, for venture capital you need money, and I mean, to lend it out for venture capital, often you need to find that money somewhere, and that's a bit difficult. Again, especially in an environment like Namibia where your hurdle rate increases, right? You've got a high corporate tax rate. I mean, at least we've delayed it now, but with the introduction of a dividend tax, you reduce the return at the end of the day. You've got your VAT thresholds, which have an impact, so all of these things reduce the return at the end of the day. You need someone to come and de-risk that. It could be a lot easier to see improved returns through, like, as has been discussed, a staggered tax profile, for instance, for startups or SMEs or similar. But look, there is some work. It's difficult. There's a lot of competition within that space for the small pools of available funding as well. And I think there things could be done better as well. With, for instance, government focusing on where really they are spending their money. The sovereign wealth fund, in trying to introduce it when you are running large deficits and are relying on the domestic market to fund those. I mean, the initial plan last year was to list MTC, take 1.5 billion of this proceeds for the deficit last year, and the remainder, so anywhere up to 1.5 billion for the sovereign wealth fund. And that's obviously been scrapped. The full proceeds are going to fund the deficit now, and the sovereign wealth fund is only getting 50 million. I think the idea of a sovereign wealth fund and using sort of the country's resources, right, the mineral wealth, so the royalties we get, the fishing rights that people pay for and similar, using those monies in the sovereign wealth fund to see larger benefits for the country is positive. But it's definitely, the timing makes it a bit difficult, but I don't think it's a terrible idea. What can the private sector do for growth? Well, I mean, the private sector is doing what it can, right? We tend to think of the private sector as some inanimate object. It's people going about, doing their jobs, trying to make tomorrow better than today. And what we tend to see is more and more government has made it difficult for that to happen. So often the private sector is trying, I mean, it's far from perfect, and there are improvements that can be made. But in an increasingly restricted environment, it makes it difficult. I mean, with lockdowns, for instance, it's difficult to keep your business open if you don't know if you're allowed to operate tomorrow or not. There's no certainty. Policies can change on a dime. It does make it very, very difficult. And even then, I mean, where you do see people starting their companies, a lot of them are taking either big loans to do it or risking their own money to do it. And at the end of the day, they see very little return for that with the sort of very high effective tax regime we have. Now, I'm not talking about just the corporate tax regime, but the overall tax regime we have. So what do we need to see? Well, we need to see government effectively getting more out of the way. Government can sort of oversee and regulate, right? Make sure there aren't gross human rights abuses, workers aren't being exploited and similar, but not try and direct it on a day-to-day basis, as we're seeing with a lot of the policy creep of late. In terms of CSOs working more closely with government, well, I don't really know many people in government, so I don't know what the best thing is there. But in terms of the currency peg, look, the currency peg at this stage is highly beneficial for Namibia. It means that we have a stable exchange rate, not that the rand is the most stable, but we import a lot from South Africa, and a lot of what we import is imported in terms of South African rand. So with a fixed currency peg, it means that we don't have inflation because of currency movements too much. If we had to depeg, firstly, the Namibian dollar would be a lot weaker than the rand as it stands, unless we have a massive oil field and then things change, but that isn't the case. But with the currency peg as it is, it means that everything we buy from South Africa has the same price every day, unless South Africa is importing it and they have price increases. But it means we've got a lot more stable inflation. If we had, for instance, a floating exchange rate regime in a year like 2014, where you've got massive mining investments, suddenly your currency appreciates a lot because there's a lot of investment inflows. But as soon as that reverses, your currency depreciates dramatically. And so you can see, prices dropping massively from one day, and the next day they're shooting up by 100, 200%. So at this rate, I mean, the currency peg is very much beneficial for the country.